Let's go ahead and talk Bitcoin. So really on the daily time frame, absolutely nothing has changed. Hopefully we're still not falling for, oh my God, look at this wick. This is so bullish. Have fun staying poor. This is the bottom. We're so strong. We're gonna bounce. We're gonna reverse. Blah blah blah. Whatever. Right. Hopefully everybody kind of understands that that is not the analysis to be making. The proper way of assessing this is what I would say is, has anything changed on the macro perspective, right? Obviously we're still downtrending. A downtrend is going to continue being a downtrend until it is no longer a downtrend. That means, by that mindset, you are going to be bearish at the exact bottom, which is true. We were bearish at this bottom. I was bearish at all of these bottoms. Why? Because the trend was down, right? And being bearish at these bottoms is the exact same mindset that had us bearish on the way down into the bottom, and that's what's important. And then once the tide sort of shifts, right, favorably, you come in, you say, oh shit, this time's different. All of a sudden the bottom is obvious in hindsight, and you can come in and say this time is physically different for whatever reason. Right? Maybe you're reclaiming a key level. Maybe you're showing strength in the form of shifting trend bullishly, higher highs, higher lows on multiple time frames, right? All of a sudden, you can come in and assess, hey, this time is different, and assume, what does this time different mean, right? Maybe it means a push up into 40K again. Maybe it means the resumption of a bull market. Maybe it means Bitcoin goes to $1 million by the end of 2022, right? Nobody knows. You can only assume. So if you make that assumption, generally speaking, because that time is different, you're more likely to be right. And if you are right, because this is crypto, because things are very volatile and trendy in nature, and things get so exaggerated in percentages, right? The idea is, when you are right, it's going to pay off massively. That's a 50% move from July 24th when we first come in and say, hey, this time's different. And yes, I'm changing my color to black again because I hate the color red. Um, so that's when we come in and say, hey, this time's different. The next sort of weakness that we have, right, is this break in our structure where we come in, we say, oh, we had an uptrend on the daily, higher highs, higher lows, since July 24th, when we said, hey, this time's different. We haven't made a bearish argument since then. And now this time's different, right? So now we can't continue making the same bullish arguments that we've been making since July 24th. Now this is different. And then we get a little negative 15% drop into weekly demand, right? Weekly demand, we tap that. We're saying, we don't know if this keeps going. All we know is this is a downtrend and nothing has changed. Obviously we are bearish because we are downtrending, lower highs, lower lows, or below key levels, blah blah blah, blah, yada yada, right? We're acknowledging at that same time we are at weekly support. Weekly support is weekly support. If buyers are going to step in, it makes sense for them to do so at big support levels, like a weekly demand zone that everyone and their mother and their grandma has drawn on their Bitcoin chart. So you can make the same argument here today. You could have made the same argument at 47K with the 200 daily moving averages. That's a very key level. You could have even made the same point at 53K where there's a daily demand zone, another pretty key level, right? You can make that argument, you can make that argument, you can make that argument again if we go back down to 30K. And guess what? You can make that argument again at the 200 weekly moving averages, where Bitcoin tends to find cyclical, sort of historical bottoms, right? You can continue making that argument. And if we were to zoom out, you could see that, this is obviously extends and blah, 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 whatever, right? On like Bitstamp. You can continue making that argument. Support is support. It is there to bounce price. You are supposed to bounce from support. That is what it is there for. It's more significant if you broke down below this support level without bouncing from it. Let's get that clear. The pressure is not on bears to just simply continue doing the exact same thing they have been doing for the past 2 months. Yeah, I keep seeing all this talk about, oh, we're going to short squeeze all the, bottom shorters or whatever. You're going to short squeeze the people that are positioned from here. Really? That's cute. They are laughing at you. They genuinely think that you are stupid when you say, "Hey, we're going to short squeeze all you bears." Right? It's stupid. The pressure is not on bears to just simply continue selling the exact same trend that they have been selling for the past 2 months. The pressure is on bulls to make sure that this support level that is supposed to bounce price actually bounces price. That's the context. So we are supposed to bounce from this region. That makes sense. If you were going to be a buyer on Bitcoin, I would assume you probably want to be a buyer at 40K, right? I argued the exact same thing here. We sort of made the exact same argument on the way down initially. We made that argument at 30K. On the way down, I made that argument at 47K here, right? It's the same argument. It is the exact same argument. Has the trend changed? Absolutely not, right? So when does the trend change? The trend changes when you finally show significant signs of strength that you haven't shown since here. This is where we come in. We say, hey, the 4-hour 200s are lost. We have broken and fully shifted our daily market structure bearishly. This is another lower low. We're now below our 59K weekly demand zone. We're below the 4-hour 200s, which tend to act as macro bottoms and macro tops, right? So that's where this time is different. That's where a bearish mindset for the unforeseeable future, whether we're at 50K or 40K or 20K or 2K, is justifiable. As long as we continue to show the same weakness that we're showing right here. Are we still showing that weakness? Absolutely. What's changed? What's different? Nothing, right? What changes would be if you were to finally manage to reclaim those 4-hour 200s. All of a sudden, that's where we come in. We say, oh, macro market environment shifting. We don't know what this means. Maybe it's just a move up into 53K. Maybe it's a move up into 60K again before the real bear market or whatever. Maybe it leads to price discovery. Who the hell knows? Maybe we see $1 million Bitcoin by the end of this year, right? The simple answer is we do not know. We can only assume that this time is different than all these other times. Whether we go up to 53K or we go up to 60K or we create a new all-time high and sweep the highs and then fall back into a bear market again, or whether Bitcoin goes to $1 million by the end of this year, does that sound fun to you? Because it sure sounds fun to me. I want to participate in all of that. I don't care what it is, whether it's 53K or $1 million or $20 million. I don't care. I want part of that. That's where the market changes. That's where we come in and we stop with the bearish arguments that we've been making for the past 2 months. In the meantime, you are either entertaining that this weekly demand zone should bounce price and has a pretty good chance to bounce price, or you're just uninterested. And I would assume if you're uninterested, you've been uninterested since 59K, right? So in the meantime, what can we look for signs of strength? Because obviously the 4-hour 200s are all the way up here. We don't want to have to wait, right? I mean, it's really not too big of a wait. It's not like we're missing out on too much, but we don't want to have to wait 14, 15% from current price to finally come in and say, oh, this time's different, right? We want to at least adjust on the way up and put ourselves in a position to take advantage of the shifts in probabilities on the way up into a higher time frame test where we may or may not shift the entire macro market environment bullishly. Or maybe it's just another test similar to here, similar to here, similar to here, similar to here, right? So in the meantime, we can pay attention to the hourly 200 moving averages. These also do a really solid job of acting as tops and bottoms. In here, we came in, we said, hey, this time's different, at least some sort of first sign of strength. So from here, we can assume that a test of our higher time frame sort of, pivot level, decision zone, right, will be on its way. And from there, either the snowball continues rolling down the hill and we form a full snowman, or our tiny little snowball of strength gets crushed, right? Right here, it gets crushed, it goes back into a snowflake, and then what bullish argument do we have here? We don't really have one. So we assume our tiny little hint of strength that we acknowledged is now gone. So the high time frame trend truly has taken priority, and we can assume the daily is saying lower highs and lower lows. So what does that probably mean? A lower low. It's going to be the same exact argument here. The same exact approach. I mean, literally copy and paste it. If we reclaim these hourly 200s, I will simply just assume that that means we've now opened the gate of opportunity for a test of this 47K daily supply zone now, along with those 4-hour 200 moving averages, which we know are very key. So that is a nice little scalp long opportunity. And guess what? It's a lot more probable than betting on bottoms, right? That is a probable move upwards. You're all of a sudden trading the most local, most relevant trend. The high time frame trend hasn't changed, right? Nothing in the context of things has changed. But the local trend, the most relevant at present day, will have changed at that point. So now we can honestly even take this a step further. So the way that I showed this in today's market update is just by doing that. These are the 100 moving average and exponential moving averages. So if we're going to take this like, oh, assume probabilities, this domino effect sort of way of thinking, right? If our hourly goes bullish, we're more likely to test the trend on the 4-hour. And if the 4-hour goes bullish, it likely means that we're bullish on the daily, and maybe the full macro market environment has shifted, right, for the unforeseeable future. Maybe it's just a couple weeks long trend. Maybe it's a 3-month long resumption of a leg upwards in something like a bull market. Maybe it's the bottom of an entire market cycle, and we only go up for the next year and a half or whatever, right? So if we're going to make that like cascade, that domino effect of bullish arguments, we can even snowball it and kind of start that snowball from an even lower perspective. So locally, the hourly 100s, or usually how you'll see me portray these, is just a 30-minute 200s. It's the exact same calculation, right? They're the exact same moving averages. You're just looking at it differently. But the hourly 100s are kind of this local trend, this very, very low time frame local trend. It's where our 4-hour market structure is continuously finding these lower highs and then lower lows along, right? And so we can make that analysis and acknowledge those as well and say, well, as long as we're not above the hourly 100s, what reason is there to assume that the local or temporary bottom, at the very least, has already been locked in? There's not much reason, right? Because physically, nothing has changed. So once this happens, We can then make an assumption that we'll probably head up to test our hourly 200s, which are doing something like this, right? We can go up and test those. That's a nice little 3% scalp or whatever, and that is a probable 3% scalp. And if we can manage to reclaim those, we'll likely see another move up into the 4-hour 200s, and we'll see a test of that region, and we can make that same exact sort of domino style effect analysis all over again. If we reclaim the 4-hour 200s, our daily trend is now bullish. We're probably going to see 49.2 and then 53. And if we reclaim 53, we'll just assume level to level towards the upsides, and we'll assume that we go up to 59. And if we break 59, we're probably going to price discovery. So all of a sudden, something as small as reclaiming these local moving averages can potentially be this, like, I don't know, think of like the cartoon where there's a car on the edge of a cliff and it's teeter tottering on the edge of that cliff, and all of a sudden a butterfly lands on the roof of that car, and it's just enough to tip it over, and it leads to a much bigger move, right? That car finally falls off that cliff. That's what this would be like. So it could potentially be like that, right? We're not going to assume that that something as small as a reclaim of this region leads to, 60K, but we're going to stair step our way into success at the very least and assume probabilities on the way up from one resistance into the next until we reach our key levels or until our idea becomes invalidated once again. So this is the way that I see it is, like, the proper way of approaching this market. The improper way would be, since we've kind of formed a range where this is our range highs, this newly formed supply zone previously formed a little bit of demand. When you break below it, you come back up, test it as resistance, it starts to act as like a range high, right? And for our range lows, we're just simply using this weekly demand zone that we've fully known is going to be weekly demand, and we can anticipate buyers to step in anyways. So now that we've formed a little bit of a range, the improper analysis, right? Because to sort of emphasize how logical the correct way of thinking actually is, you can use satire and kind of poke fun at the improper thinking. So let's start putting ourselves in the mindset of an emotional trader. This is how you don't make money in crypto. Okay, well, every time we come down to 40K, maybe we break down from 40K. So let me sell. And then if we start to react away from that region from my sell, then I'm probably wrong and we're not going to break down. And even though we're coming up into this resistance, what if we break up and out of that range high resistance? What if we start to go up into the hourly 200s again? Let me buy here. Oh, this kind of looks like a breakout. On the 5-minute chart, this is like back retesting, this is like breakout, back test, and you can kind of see it on the 5-minute. So let me buy here just in case, but I'll only buy half. And if it goes down to mid range, I'll buy the other half. Oh, but here we are cascading. Oh, we're wicking below the weekly demand zone. The 15-minute candle closed below this weekly demand zone. So let me sell. Let me get out of my position. I'm probably wrong. But oh, wait, if we break up out of the range, let me revenge short, right? Let me revenge short the move upwards because it's probably not going to lead to anything significant. Even though it's something we haven't managed to do in 2 weeks, it's probably not that big of a deal. I'm just going to assume that we break back down into the range. We do the low time frame significance. We break out. We show reclaim of the trend. We break out of the range highs. I'm a revenge short right here, and we're probably just going to deviate back inside and fall back through and head back down to weekly demand zone. That's where I'll close my short, and that's where I'll rebuy back. And if we break down from the weekly demand zone, I don't want to cut my losses. I want to buy more. It's probably going to be a wick, right? It's probably just going to wick below. It doesn't really mean anything. Do we understand how stupid all of this sounds? Can you acknowledge how much of an idiot I just sounded for the past 5 minutes and maybe for the past 20 minutes? I don't know. That's up to you. But at least the past 5 minutes, right? It is stupid. Do not fall for it. Stop being emotional. Take things for what they are. If we're doing something significant that we haven't managed to do in the past 2 weeks, that probably means something important. In the meantime, we're probably not doing anything different. So stop calling bottoms. Stop thinking that Wix means strength. Stop thinking that your favorite person on crypto Twitter telling you to have fun staying poor, or if you didn't buy the dip or whatever because they saw this wick or because they saw this reaction off the lows or this wick or this wick or this wick or this wick. Stop believing them. It is stupid. It really is. So hopefully that's sort of like inverse psychology or whatever. Being the emotional trader shows you how stupid it is and how you probably want to be on the side of the calm, cool, collected. Let me acknowledge the low time frame strength. Let me acknowledge what support is, where the range is formed, what the current local trend is, has anything changed, right? That's the proper way of thinking. So now let's go ahead and move over to the ETH analysis. Let me take a sip of water really quick before we dive into this. Maverick says my grandma is out trading me. She bought weekly demand. That's funny. What are your thoughts on the head and shoulders pattern that looks to have played out and it looks like we'll drop to 38K and eventually to the 30K level? Um, I don't trade head and shoulders. Good question. We'll go to that really quick. I don't trade head and shoulders. I typically see it as sort of a meme, but uh, if you were going to draw head and shoulders, this is what it would look like, right? So I've said this before, and in terms of like narratives, people always say like, Merc, what's your narrative? And I don't really have a narrative. It's just like whatever agrees with the proper mindset and the proper way to approach things, or at least what I label as the proper way. And that is just trading the trend and assuming that the trend is going to continue trending and then adjusting when something different happens. Whatever narrative agrees with that mindset, whatever's relevant at that time, that is my narrative. So when we're in all-time highs in price discovery and every bear on this planet is dumb trying to call tops and we're just continuously creating higher highs, higher lows into a new all-time high every other week and we're trending along 4-hour 200s, and as long as we're not above, or I'm sorry, as long as we're not below the 4-hour 200s, you can't tell me why the top is in, right? So when we're in that sort of a market, my narrative is hyper Bitcoinization. Plan B stock to flow model. Willy woo bull posting on chain indicators and blah blah blah. Right? Like whatever bullish narrative you can give me, that is my narrative. When that fits the context of the market. And Bitcoin's doing this, right? When we're doing things that we haven't managed to do in the past 7 or 8 months, break down below the 4-hour 200s. Daily market structure is obviously bearish. We broke down below some very key daily demand zones. When we're doing all of that, my narrative is, oh, Bitcoin goes to zero. Like whatever bearish narrative you could possibly give me, oh, it's not a store of value. Oh, it's overheated because Meek Mill tweeted about it, and Mia Khalifa tweeted about crypto, and people are getting into NFTs and it's overheating and blah blah blah. Like whatever bearish narrative you can give me, that's my narrative when the market is doing this, right? So if you're going to give me a head and shoulders pattern here in the midst of a high time frame downtrend, I believe you. I 100% believe you. If all of a sudden we reclaim 4-hour 200s, we break the daily market structure bullish again, we start to show strength, we reclaim key levels, right? We do all these things and you're still giving me a head and shoulders pattern. Now you're coping, right? Now you're not trading the trend. You're not looking for narratives that agree with your trend. You're not doing that. You're coping. You're arguing an irrelevant or unprobable sort of take on the market. And if you are right, you're going to be the genius. But there's such a low chance that you are right. It's not really going to matter anyways, right? So, or at least in the long term of things, it's not going to matter. So that's my thoughts on that. So ETH analysis. um, I do want to say ETH on a high time frame. We have so many levels here. So many levels. It hurts my brain. It really does. On a high time frame, 200 daily moving averages are pretty key for ETH, right? We tend to respect them as high time frame support and resistance, whichever way we're trending. And they're really good at dictating the long term sort of outlook on things, right? Closing a couple daily candles below the 200 daily moving averages doesn't necessarily mean that we're screwed and that we're going to enter a true bear market and we're going to go negative 90% from here and blah, 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 whatever. It doesn't necessarily mean that. It definitely is a warning sign, though. The last time that you managed to close daily candles below these 200 daily moving averages was all the way back here in middle of July, right, of 2021. And the time before that would be April of 2020. And obviously that's significant. You're doing something that you haven't managed to do, or you've only managed to do one other time in the past 2 years, pretty much. So we probably want to pay attention to that, right? The I forget who it was. If you're watching this right now, I'm by no means attacking you, but somebody was saying in community charts, I believe, they were saying like, oh, well, what if ETH were to just kind of break down below these 200 dailies and immediately reclaim, right, and break out above 10% or whatever, and that marks the local bottom, the macro bottom. We continue this price discovery from there. And obviously, you can make that argument. It's extremely speculative. The way that I would prefer to see things is, oh, we're closing daily candles below the 200 daily moving averages. We're probably fucked, right? And if we do manage to reclaim them, oh, okay, nice little bottom there. That was probably the bottom. We're reclaiming the 4-hour 200s. Daily market structure is probably bullish at that point. We are doing the same exact thing, deviating below the macro trend, kind of like we did here. We're probably good to go, right? We can now make arguments towards the upside. But that's an if it happens sort of scenario. I never want to be the person who's making these assumptions because all of a sudden you're not taking things at face value. You're you're adding your context and your opinion and your instinct to what the market is physically telling you. So all of a sudden the market is saying, "Hey, we're closing candles below the 200 dailies," only for you to say, "Yeah, but it's a fake out." Oh, and then this breakout, this one right here, that's not actually a breakout. That's a fake out. That's a bull trap. Oh, but this breakout's the real deal though. Oh, but this breakdown's a bear trap, and so is this one. Oh, but this breakdown's for real this time. So now you're just throwing shit at a wall and you're hoping some of it sticks, and of course some of that is going to stick. So are you right? Is it your instinct playing out? Or did you just get lucky and it's just a coincidence, right? We'll never know unless you have multiple years of experience to confidently say, yeah, my instinct is right 70, 80, 90% of the time, right? Unless you have that experience behind you, you can't really know. Are you just being lucky? Are you just throwing shit at a wall and some of that shit is sticking? Or is it your instinct is just total alpha, right? So I would much prefer to kind of just take things at face value for what they are. Oh, we're closing 200 we're closing daily candles below the 200 daily moving averages. We're downtrending on every single time frame. Oh, we're fucked. That's it. Like, what else do you want me to tell you? We're screwed until we're not screwed anymore, and we reclaim, we show some strength, and literally whatever bearish argument you want to give me right here, as long as you were gonna give it to me at 4,200 as well, I'm ready and willing to hear it. But don't come in and now start giving me bearish arguments. You should have already been bearish on the way down. So that's the proper mindset. Because has anything changed? And the answer is, of course, no. We're still in the same market that we've been in for the most part since like December 12th ish. So if you're bearish now, but you were bullish at 3,800 or whatever, you're probably not doing it right. Even though any bearish argument you give me fits this current chart, the current market environment. Only bearish arguments fit, if you want me to be honest with you. In the meantime, it is just simply going to be support is support. It makes sense to bounce from support. If you are a buyer, I assume you would probably want to be a buyer at support. Is there any more of an analysis to be making here? You either buy support and you're ready and willing to buy the next support and the next support and the next support and the next support, or you just don't care and you're just not interested in this market because we're downtrending, right? There's only really two successful mentalities to approach the current market environment in. You're either one or the other. There's no sort of in between. You're either only interested in strength or you like ETH so much that you want to own more of it at places where it makes sense to own more ETH. And if you benefit from it, then great. And if you don't care because you love ETH so much, you're ready and willing to buy it at the next support level lower, anyways. So, like, what else do you need? There's no narrative here, there's no bias. It's we are weak. We are doing things we haven't managed to do in a very long time. That probably means we're fucked. If it doesn't mean we're fucked, great. Like that's it. There's nothing else to say. We can zoom in, we can look at lower time frames. We can try and make a different argument. We're not going to be able to. The lower time frames are only going to agree with what the higher time frame is already telling us. Because we're not in that like mixed region yet, right? We're not in this region where our lower time frames are bullish, but our high time frame is still bearish. We're not at that point. Everything at the moment is still currently very bearish. So if we start to show little tiny hints of strength, we'll come up and we'll say, oh, now we can assume a move up into this region. Maybe we have 4-hour 200s along with that region by the time we get there. If we reclaim that, then in hindsight, we're not fucked. That's probably the bottom. We're back above the 200 daily moving averages. That's great. That's dandy. We can assume level to level towards the upside for the unforeseeable future, just like Bitcoin, right? Trade the local trend. As long as we're not doing that, the high time frame is still implying, hey, even if you manage to bounce from a region where it makes sense to bounce from, we're just going to smack you back down anyways. And the lower time frame is saying, hey, you shouldn't even be anticipating that we are going to bounce at all because we haven't done anything significant. Are we showing any sort of sign of strength on the lower time frames that we weren't showing here or here or here or here or here? No? Oh, okay. This time's probably not different. Oh, we are reclaiming lower time frame key levels. Oh, we are showing signs of strength. Oh, okay. Let me look for those 4-hour 200s now. That's it. That is the analysis. Pay attention to these hourly 200s. If we reclaim them, that's probably your local bottom, just like this was your local bottom, just like this was your local bottom, right? In the meantime, we have upside potential into these hourly 200s just to put in another lower high and continue spiraling downwards. And for that move, everyone is telling you to have fun buying the or buy the dip or have fun staying poor on to be irrelevant anyways. It was totally irrelevant. You should have just not paid attention to it. Didn't matter. Had no use. You could have just walked away from the market for a couple days, came back and had more buying, purchasing power lower. So look for the signs of strength. Pay attention to, hey, what's relevant locally? What is relevant locally? I don't know. I haven't been paying attention to this ETH chart. There's no reason for me to want to. Maybe you could say the 15-minute 200. So if we reclaim these, right, we'll get a tiny little move up into those hourly 200s with this resistance. Of course, hourly 200s, reclaim that zone. Look for the 4-hour 200s with this zone. Reclaim that. You probably want to start being bullish on ETH altogether, like for the unforeseeable future, right? That's the approach that has had me successful, has had these live streams successful, has made sure that my ego stays very big, and I'm going to keep rolling with it because it's working, right? Hopefully you guys see when I'm kidding. You guys know when I'm kidding. So a daily for ETH BTC, very much a downtrend. We also assessed, hey, this time's different for ETH BTC. We kind of nailed the general regions where, hey, if we're gonna lock in a high or low on the daily, where is it gonna be? If we're gonna continue downtrending on the daily, lock in another lower high, where's that gonna be? What dictates, hey, this time's different for the macro market environment for ETH BTC, right? We've kind of nailed all of that. So to see this chart downtrending is honestly comforting. We have now come down into this daily demand zone where, of course, if you enjoy owning ETH over BTC, you probably want to do so at these support levels. I would assume if we break down from here, you're ready and willing to buy more at the 200 daily moving averages because they get pretty well respected on a high time frame, right? And if we break down for that, I would think that we can kind of make this not visible on the daily. I would think that you probably want to do that all over again at this weekly demand zone. We break down from there. You probably want to do that all over again at 0.047. Same sort of thing, right? In the meantime, you're fully aware that you are counter trading the trend. You are not buying these regions hoping and praying that you're a genius and that you just bought the bottom and you can hold this for the rest of forever into price discovery, right? Into an ETH to BTC flipping. That's the wrong mentality. Support is support. You're meant to bounce from support. If we show strength again, then that support bounce, what we anticipated to just be a bounce, ends up being a bottom in hindsight. And that's where we can come in and comfortably say, hey, this was the bottom. So you're meant to bounce from support. If you put in a lower high and then break down from your support and then head to the next support, that's what this trend shift that you haven't managed to do in 3 months, right? That you did here when you come in and say, oh, this time's starting to look pretty different. That's what this is implying. That you're not in this higher high, higher low, buy the dip, ride the wave up into the next resistance market anymore. You are now in, oh, if we bounce from this support, we're probably going to put in a lower high and then break down below that support and then head to the next support. And if we bounce from that one, we can anticipate another lower high and then eventually breaking down from that, right? And then maybe we don't even bounce from that one. Maybe we just keep going. That's what this market is implying. And it was the same exact analysis here. So if you're going to come in, give me bearish arguments at support, make sure that you were also giving me bearish arguments when we initially showed key signs of weakness on high time frames 2 weeks ago, right? And then said, oh, if we're going to continue downtrending on the daily time frame, what's the ideal region to do that at? Oh, 4-hour 200s. Okay. Lower high, lower low, right? Otherwise, you're either not interested in ETH, BTC, or you love ETH more than BTC so much, you're buying here, not asking questions. You're buying here, not asking questions. You're buying here, you're buying here, you're buying the next one, right? And then Bitcoin dominance. Bitcoin dominance starting to look pretty scary. Of course, on a daily time frame, we're going to call this a support region. This support region, pretty key. We've acknowledged it on every test downwards. The mindset has, for the most part, been the same on every move into it. It is, hey, we're probably going to break it, just as we broke the support above that, just as we broke this, as we broke that, right? We're probably going to break it, but if we were to bounce from this region, that's expected, right? So this is now a profit-taking area because we expect dominance to bounce from here. And as long as we don't do anything significant, we can anticipate that this support level is going to break eventually. And if it does break, new all-time lows are potentially on the way and most likely on the way, right? And if instead we bounce from this region and then do something significant, we probably want to adjust. We probably want to adjust. We're probably going to start wanting to adjust here in the next couple days or so. So again, I don't mean to fully scare you, but we're starting to peek our head out of the exact same validation for the way downwards that we knew would be the invalidation if we started to show signs of strength on the 4-hour. So we're starting to show these signs of strength. This is your red flag that, hey, if the altcoin market was scarce against Bitcoin for this trading period, it's about to get even scarcer. It's about to become, if it's 3 out of 100 altcoins are uptrending against Bitcoin, it's about to become maybe 1 out of 100. So you probably don't want to be in altcoins, right? Of course, there's always going to be the exception. In this period, I believe Solana was the exception. So you're sitting here saying, oh, stay away from altcoins. They look terrible. Most of them, 99% of them are downtrending, blah, blah, blah. Meanwhile, Solana has done like 10x into new price discovery during that period. So it's a very general, it's a very broad statement. Of course, strength is strength. Uptrends are uptrends. Strength typically is going to attract the attention and the volume and the bidding power of other people who are looking for appreciation in their investments. And that is every market participant. That is everyone watching this stream right here, right now, right? Every single person here would much rather be invested into something that is going up into new all-time highs, higher lows, trending along whatever it's trending along, a trend line, Ichimoku, 4-hour 200s, hourly 200s, whatever the hell it's trending along, higher highs, higher lows, price discovery, new all-time highs, rather than be stuck into something that's losing value. Whether it's the US dollar, whether it's Tron, whatever it is, right? Whether it's Bitcoin, you would much rather put your money in something that's going up. So if you find that gem, if you find that 1 out of 100 that is higher highs, higher lows, price discovery, trending, don't think that, oh, I need to capitulate this. I need to sell this. This is going to follow what the rest of the market is doing. It's not the right mentality. But it is saying, right, this trend to me does say, oh, you probably don't want to be exposed into altcoins, or like it's unlikely that your altcoin, right, whatever you're looking at, is the 1 in the 100, is the diamond in the dumpster, right? Because it's about to get scarce. It's about to become once in a blue moon sort of thing. And it already, even during when dominance is largely downtrending, it already has been pretty scarce. It's a very different context than what we experienced for all of this downtrend, and it's much, much different than anything we experienced for this downtrend. During here, it was just throw a blind dart, just 10x leverage on FTX, doesn't even matter. And as long as you hit the buy button on any random altcoin during this period for all of these 5 months, you're in profit. Come back a week later, 2 weeks later, month later, you're probably up 10x. At this point, you probably could have said the same thing. Generally speaking, most of the market was outperforming Bitcoin. This time around, it's been musical chairs. Altcoins to me are already musical chairs, but even more so. Like, you either played the metaverse narrative or you missed out. Every other altcoin was really just unappealing. What's been the narrative the past couple weeks? L1 protocols, right? So anything L1, was whether it was Sushi, YFI, Atom, One USDT, FTM, Luna, whatever it was. What's been the narrative the past couple days? It's really only been like one Atom, maybe FTM. I don't even think FTM fits in that category. Maybe Near, right? It's gotten even smaller. So it's probably only going to get smaller from here. We don't want to assume too hard just based off of a tiny little move above the key level, right? We don't want to assume, uh, hey, this thing, this indicator generally tells us the trend for the next couple weeks, maybe a couple months, maybe a couple years, right? We don't know. We don't want to assume too hard just based off of a couple candles, but those couple candles, by all means, are definitely a warning sign, if nothing else. And the fact that this momentum is starting to curl over sideways, right, that should tell you something. So that is everything that I have to ramble about for all this stream. That was a pretty long rambling, but I'm going to let you guys go ahead and take over from here. Raji says, "Hi, Merc, enjoying the live stream so far. Thank you. I'm glad you're enjoying it. Can you please take a look at Cardano and Link?" Yeah, absolutely. All right. So Cardano, even if you were going to pay me to long this, I wouldn't do it. I'm sorry. I know a lot of people in this room probably love Cardano. You cannot pay me to be long on something. I don't care how negative the funding is, right? You cannot pay me to be long on something that looks like what my nightmares would look like. Consistent bleeding of lower highs, lower lows, every single support just gets absolutely de- destroyed, right? Demolished. Another D word, whatever. And we break down to the next support. Maybe it bounces, it probably doesn't, and then we just come down into the next support after that. You cannot pay me to long something that looks like this. on every single time frame, right? If you are the person who you don't even have to pay me to buy Cardano. I want to buy more Cardano. I love Cardano. I think it's the future. I believe in the fundamentals. I'm an investor. I don't care what price this is at, whether it's $30 or 3 cents. I want more. I would assume you're probably being that person buying more at $1.20 and 96 cents. And below 96 cents, I can't honestly justify why you would want to be that person again until 38 cents and then 24, right? And then maybe 15 and so on and so forth. So you're starting to get to these very appealing prices if you're an investor. But from a TA perspective, if we're just assessing trend, momentum, probabilities, this looks absolutely awful. You cannot look worse than this. You really can't. There doesn't get uglier than this chart. That's the local trend. Or really not even local, it's a macro trend, right? 4-hour 200s seem to be pretty solid to me. Of course, there's a couple deviations. Definitely not ideal. You didn't manage to shift the momentum. So let's just go ahead and turn off price action because you don't even need it really. Has the momentum changed at all, really, since, let's say, here? Has the momentum shifted? Is anything been different on the chart when you just look at it from this way? Obviously, this is an uptrend, right? And it sustained as an uptrend. This, for the most part, was sideways. This is a downtrend. This is an uptrend. Have we shifted the momentum either sideways or bullishly? No, absolutely not. If you turn on price action, do you respect these moving averages as resistance? Yeah, pretty well, actually. Consistent, macro tops, every single time it gets tested. Sure, you have this deviation. Test them again, macro top, nearly come up into them, macro top. I would assume that if you bought here, you're probably looking to sell up on the way into these anyways. Same thing here. I'm assuming you probably want to sell into that anyways. A little bit of a deviation, macro top. We respect these moving averages, right? So what tells you that the bottom is in as long as you fail to do anything that looks like this, right? And in my opinion, nothing. You cannot argue with me and tell me, oh, the bottom is in because XYZ narrative, fundamentals, weekly demand, blah, 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 whatever. I'm just going to laugh at you and say the same bearish argument I was making here at $2.36 is still relevant today. So I don't care. You can bounce 50 or 60 or 70% from current price and still not even reach my break even point. So I don't care, right? And that's called trend trading. So that's my outlook on Cardano. From a high time frame perspective, I wouldn't touch this with a 10-foot pole. I'm being very rude here, but it looks terrible. It looks like if ETH were going to continue breaking down from the 200 daily moving averages that it has not broken down from any time in the past 6 months and a year and a half prior to that. It looks awful. It cannot look worse. Locally, pretty similar to Bitcoin, hourly 200s are nice and consistent as a local trend. So when you reclaim them, and yes, I would have told you the same thing here, right? When you reclaim them, that's when you can assume a much bigger bounce into your higher time frame trend. When you lose them again, all of a sudden your snowball of a bullish argument that you formed here at $1.28 goes away at $1.40. It's now gone. You're back into the higher time frame trend has taken priority. This looks like shit. Lower lows, lower highs on the daily on every single time frame. 4-hour 200s, consistent macro resistance. There is no bullish argument. Let me expect one support level into the next, into the next, into the next. Either a buyer or you're uninterested. Personally, uninterested. If you're a buyer, all power to you. right? I'm the buyer for Bitcoin. I'm the buyer for ETH. If you're the buyer for Sol, if you're the buyer for Link, whatever, all power to you. You are that investor mentality for those specific assets, right? The other one was, let me see if I can remember it without going. Was it Link? I don't remember. Yeah, it was Link. Okay. Yes. Link. So we're talking about strong uptrenders, right? Once in a blue moon, not very frequent sort of assets. And Link is one of them at this moment. Link is probably one of the coins that you want to be looking to buy the dip on if you're looking to buy the dip on anything at all in this market, right? It is strong. It is uptrending. If you take a look at something like 4-hour 200s, which are pretty relevant historically and decently relevant locally. So maybe if we change the time frames a bit, we might even be able to make a different analysis. Let's go to the 2-hour. Okay, so now we're seeing like the 4-hour 100s or the 2-hour 200s is the way that I'm portraying it here as more of a higher time frame trend that's relevant locally, right? So reclaiming them initially means that hey, this time's different. We can assume the next resistance. We can assume a much bigger bounce. This obviously isn't pretty, but you have this daily demand zone as confluence anyways. So if you're positioned into Link at this point, I would think that you're accounting for this daily demand zone and your relevant macro trend, right? So you're kind of like, if you have a stop loss, you're probably accounting for both of these regions, meaning your stop loss is below this gray box. Or at least that's how I would approach it, right? Truthfully, there's not me just saying, oh, I wouldn't have gotten stopped out. You wouldn't have got me there, blah, blah, blah. I'm being honest with you. I really am. You'll know if I'm, you know, I'll gladly let you know if I would have gotten stopped out or if it would have caught me off guard. This time it wouldn't. So then you continue to reclaim these 2-hour 200s, and then you're grateful that you sort of accounted for this daily demand zone as well. Because truthfully, this time is still different. You are still trending high time frame bullishly, doing things that you haven't really managed to do since November 14th. When you zoom in, because if you're going to ask yourself, okay, now are the 2-hour 200s or the 4-hour 100s, however you want to think about them, are those relevant locally? The answer is no. You haven't come down to test them since initially reclaiming them and since initially reclaiming them here. And when you did test them, you kind of just, chopped in between them and this daily demand zone. So they didn't get respected. So are they relevant locally? The answer is absolutely not. So what is relevant locally? The hourly 200s are. So that's where you're finding these higher lows on your 4-hour chart to then go on and create a higher high, right, into your next resistance. If you pull back, you're going to find another higher low, or that's what you would assume. If you break out, you're going to come to the next resistance. And that is the trend. So for me, I'm looking to buy the dip at the hourly 200s along with whatever confluence I can find along with that region for Link, and I'm looking to hold that position into a higher high and who knows, maybe even the next resistance, right? If we break out above this resistance level, the implication of that is just, oh, we're going to head to the next resistance, right? If we break out above that one, it's just, oh, we're probably going to head to the next one, so on and so forth. And that is trading the current high time frame trend. Let's see. Can we look at AVAX, Sol, and Near, and Atom all in USDT pairs? Yeah, AVAX. 'Cause, 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 'c All right. Let's go ahead and delete this fib draw, even though it gets respected pretty nicely. We don't really need it at the moment. So AVAX, if you are the buy the dipper, right? Buy the dip, or as you see the memes on Twitter, uh, you're probably buying the dip at this daily demand zone, right? I would assume that if you're the fundamental investor, you just want to own more AVAX, you're probably buying this region, asking questions later. You might be buying the 200 dailies. Actually, no, they're not relevant. You can't come in here and tell me, oh, AVAX likes to respect the 200 daily moving averages historically, because this is all you have. Your sample size for that analysis is 2, right? So we're now ignoring these daily moving averages entirely. They're not relevant, right? So I would think that the next region you want to buy the dip at would be all the way down here at $50. So take that how you see it, right? The local trend is, of course, bearish, as we're losing the 4-hour 200s, which are historically relevant. When we're above them, we see massive breakouts, crazy trends. When we're below them, we see expansive breakdowns. This time is different. Strength tested your all-time high supply zone is what I'm going to call it, because if you broke out of that region, you're probably going to new all-time highs. Never broke out of it. Resistance is resistance. Of course, we're still looking to buy the dip, play the trend, but eventually you have to come in and say the trend is still down. I would start making that analysis once you really start to break down from those 4-hour 200s again. So kind of similar here, and Martian actually took this setup and benefited from it. If you're longing AVAX, let's get rid of these squiggles. If you're longing AVAX, you're looking for that local trend, which I would think is probably something like hourly 200s, maybe. And then that breaks down, so you get stopped out. Then you assume a bigger breakdown into a more ideal swing long entry. That works out pretty well. If you're just looking at 4-hour 200s, you're saying, oh, but we broke down and retested it, right? Not really, because your 200, or I'm sorry, your daily demand zone was kind of confluent with that region. So I'm assuming if you're bidding 104, you're also going to be bidding into like 101-ish. And your stop loss is probably below somewhere in here, right? And when you account for that, the 4-hour 200s act as support. They give us the nice little bounce that we expect to see. Unfortunately, resistance gets tapped. That's a good take profit area, right? And we come back for another test. You either find a higher low on the daily here and continue the bullish break, or you don't. You likely find a lower low, and that means the macro market environment. Geez, try saying that 10 times fast. Macro market environment has shifted bearishly altogether. You're now downtrending. It's now a sell the rip sort of mentality. And if you're an investor, then buy here, buy 50, right? All the way down. So is there a local relevant trend for those hourly 200s that we mentioned? Right, so you would have bought the dip along them initially, you get stopped out, look for the higher time frame trend, beautiful bounce into what I would think would be a take profit. You're reclaiming a local trend. Hopefully you hold that, and you don't. That's really it for AVAX. I would look for a reclaim of this region, but really I would want to see a reclaim of like 101-ish along with those 4-hour 200s again. Another one was Sol USDT that you wanted. All right, Sol USDT, 200 daily moving averages. Can we use them? You can argue. You can say yes, some might say no. I'm going to argue that if these were extended, they would probably act as a nice little bottom here too. So in this case, we'll say like, yeah, maybe. It's definitely confluence to an analysis that we can already create, which is just simply, hey, there's some support in this like 135-ish region, right? And and then you can throw that and the 200 daily moving averages are there too. And maybe it's coincidence, maybe it's how it was supposed to be, but the 200 daily moving averages acted as a bottom the past 3 times that they were tested months ago. So historically relevant, both horizontal support and arguably dynamic support as well. In the meantime, has the trend changed? Is there a reason to be bullish on Sol? Absolutely not. There isn't. I hate to break it to you. I'm very sorry. I know a lot of people love Sol here. Maverick hates me right now. Lower highs, lower lows. If we do bounce from here, what's your argument that this time is different if you can't manage to break out above this daily supply zone and then threaten a move up into this daily supply again, also creating a higher high on the daily? And I would say you don't really have an argument as to why it would be different, right? And it really is that simple. And if we zoom in, the analysis is only going to agree with everything that we just said. And then uh, what you mix for the other side of that is that, hey, we kind of have a void here. There's not much stopping us from heading to $80 if this isn't some sort of bottom, right? If we continue bleeding, printing what my nightmares look like, and what's to stop us from heading to $80 at minimum, where we have daily supply or daily demand? Sorry. I would say there's not much stopping you. There really isn't. If we pull out our fixed range volume profile, what's here? There's nothing there, right? It's volume, 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 black hole, volume. So pretty scary, right? It's a, I hate to say this, I really do. Uh, I'm gonna get memed, but it's a do or die sort of region. 4-hour chart, lower highs, lower lows, of course. So that means that on no relevant time frame are you showing strength. You're also closing 4-hour candles below this daily demand zone. So I don't know, potentially pretty scary. And locally relevant are the hourly 200 moving averages, and that's really what I would be paying attention to and giving Sol the benefit of the doubt that it has finally managed to do something different, and we can look for a move up into 170. And once 170 breaks and we can reclaim that, that's where I'll start giving you the argument of, oh, look at that. The 200 daily moving averages and that daily demand zone were a temporary or local bottom, maybe even a high time frame bottom, and we can just look for 190, 210, 232, 249. If we break about out above 239, then new all-time highs, price discovery, turn my brain off, bears are dumb, higher highs, higher lows, right? But we would have already been in a less exaggerated mindset of that exact same sort of theme anyways on the way up into that, because we're acknowledging the signs of strength as they come and playing the assumption of the most relevant probability. What is the most relevant probability at this moment? Even though we're at support, we're downtrending. It sucks to be a Sol lover right now. It really does. If you love Sol, you're probably buying more here. And if you don't care, you're just here to make money, you don't care what asset it is, you're probably not interested in Sol at all right now, as some of you probably aren't. I know you had another. As Maverick says, I need a new name. Oh, that's funny. And then near. All right. We'll take a look at near, and we will take a look at link BTC, SYS BTC, and Atom, and anything else that you guys have. But I need a drink of water first. Near USDT. Oh, okay. So near USDT, we labeled this as a range. So really, really pretty range to be working with here. Um, it's very simple. A range simply implies, and it's not the ideal range. I'm not going to sit here and bullshit you. Typically, what you want to see if you are a textbook trader is the first high is range high. So that would be like the exact pico top of this wick, or the highest wick. And then the very next low should be range low. So that would be the end or the bottom of this wick. If we go straight across, to me that looks a little bit uglier. So rather than just be textbook, follow everything the way that it's supposed to go, I'm just kind of using what looks prettier. I mean, I'm being honest with you. That's what I'm using. It's just instinct. It's just, hey, I've been trading for almost 7 years. No, 6 years. And this is how I've liked to draw my ranges. So if it's ideally textbook, great. If it's not, you got to kind of rely on instinct and what looks prettier. But for the most part, the idea is the same. Range high, range low. Every time we come up into range high, that is a sell. You get the fuck out of near, you sell, you ask questions later, you anticipate that we're going to come back down into mid range at the very least. And truly, what it implies is we come back down into range lows. And when we come back to range lows, you blindly buy and you anticipate that we're going to come up into mid range. And if we break above mid range, we're probably going to range highs, and the cycle repeats all over again. That's all it is. Turn your brain off, trade the range. Range highs, sell. Range lows, buy. If you can find good invalidations for both of those, then play it. Do that. That's how you will benefit. And then when we break out, assume this time's different. This time we are doing something outside of the range norm that we haven't really done before. This time we're doing something we haven't done before. Oh my God, this is so bullish. Higher highs, higher lows. We're in price discovery. We're going to the moon. Who knows? Maybe near gets priced at $200 by the end of the year. You don't know. I don't know. I'm so bullish. I need more near. I'm going to buy the back test of the range highs, ask questions later, anticipate a higher high. Oh, wait, we're fucked. This is a deviation. Range highs into mid range into range lows. You could have said the exact same thing here. Breaking down from the range, we just consolidated from this region for, I don't know, a couple days, a week at this point. We're breaking down, we're closing candles, lower highs, lower lows. We're fucked. We're going to $11. We're going to the 4-hour 200s. If we break below those, we're going to $10.20. Oh, wait, we reclaim the range. That's a deviation. Mid range, range highs. So what are we looking for near? That little tiny rest of the move up into those range highs, right? Why? Because this is the same exact analysis you would have been making here at 1370. And I would assume you probably put your stop loss below these lows. Or if you're a true like swing trader, you might have even accounted for these 4-hour 200s and put your stop loss below there, right? Maybe below the 4-hour 200 EMA or below both of them, depending on how you trade. But I would think at least below this wick. So what's changed for near? Nothing, right? It's just ranging. It's going sideways. Are the moving averages going to be useful to us? Probably not, right? Probably not. The lower time frame moving averages probably getting chopped to hell right now. Everybody assuming that this means pull or break out and this means break down. They're hating their lives. They got chopped up 6, 7, 8 times, and they don't know if this is resistance or they don't know if they should be just ignoring it and trading the range. Right? So the trend analysis has not worked for, I don't know, since here. It hasn't worked in the past 3 days or so. So we're not working with the trend analysis anymore. We're working with this is sideways. Let me know when you do something other than sideways, and I'll believe you. And then if I anticipate the breakout only to deviate back in, I need to readjust. Right? I need to readjust. This time, not so much because you're still trending. Right? So pretty clean buy here in the form of a trend into a range analysis, but this time, trend or range analysis, right? Sideways. Assume breakouts above the range, assume breakdowns below the range, adjust and anticipate deviations and continuation of the norm. Whenever they happen. And that is it for near. Link BTC. Right? I didn't miss anything, did I? Oh, and Atom. Oh, okay. Atom USDT. So Atom USDT is unfortunate because I did not get filled on this entry that we talked about on Friday's live stream. And of course, I'm being honest with you. I did not get filled on this. I was most definitely looking to play this. Spent about, I don't know, half an hour telling you guys the mindset, trading things that are uptrending, blah, 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 yada, yada. We drew up a bunch of setups. We said plan A, plan B, plan C. This is how you look to play Atom. And we're looking for plan B. We're still looking for plan B. And plan B, for the most part, is playing out without us. It's unfortunate, right? We said ideal zone to get long, swing long on Atom would be the 4-hour 200s and any sort of confluence to go along with them. That led to this setup. That is ideal. That is, hey, if our daily market structure breaks, if we start to downtrend on any relevant time frame, this is the most ideal region for us to smack our face into very strong support and reverse any sort of weakness that we were showing. It doesn't have to be at that region. We can show strength once again and continue from anywhere, right? But the most ideal region would be below here, meaning if we go past this region, what's to say we're going to smack our face onto some sort of crazy support and reverse all the weakness again? And we would say not much, right? So therefore, this is an ideal setup. And if this stop hits, we're going to assume the absolute worst. We're going to assume Atom is screwed. We're going to 2340 again. We're going to 16 again. We're going to 0, right? Whatever. But that all happens. That all becomes relevant and probable once we're below these 4-hour 200s with whatever sort of confluence we can find to go along with them. So ideal swing long, right? Unfortunately, we got this crazy wick just above where my bids were, and here we are testing the local trend once again, right? So this would have been like plan A, meaning this is plan B, right? There's another setup in here somewhere that says long this region, hide your stop loss below the lows, and if this gets stopped out, we're probably heading to your plan B ideal entry region. So you take a loss on that. You assume a move into your further bids. You're still trading the trend, right? Just the only thing that changed was the time frame that you're trading the trend on. You back test that local trend as resistance. Okay, good. That's what it's supposed to do. Now you're below it. You previously respected it pretty well on the way up. It's supposed to reject you. You're supposed to anticipate further downside because this time's different, right? Get rejected, nearly come down to your ideal entry. Here you are once again. Are you getting rejected? Is this time different? Currently, it's not different. So if you have hope that these bids fill, you can keep that hope for the time being. Nothing's changed. You're still getting rejected by this 3830 daily supply zone. You're still getting rejected by the hourly 200s, which is a local trend. So to keep these bids here and anticipate that they still hit is actually justifiable, right? There's no reason telling us, hey, this is going to run without us. It's unfortunate that it bounced, you know, 12% or whatever without us, but there's nothing different yet. If we reclaim this region, should I continue anticipating my bids to get filled? No, because we're no longer showing weakness to tell me, hey, we might come down to your 4-hour 200s and test those as a higher time frame trend, and maybe they hold, maybe they don't. We're now strong, bullish, uptrending on every time frame, anticipating resistance level into resistance, break that into the next resistance. What is the next resistance for Atom? If this is all-time highs, the moon. We don't have a resistance level, right? We're going to look to sell absurdly high fib targets. If it hits, great, we take profit. If it doesn't get there, we have an invalidation in the meantime. The hourly 200s is a local trend. And if we break down below the 4-hour 200s, probably don't want to be in Atom at all on a much higher sort of outlook, right? So that's the way I'm going to be looking to trade Atom from here. And then, oh, Merc, we look to get in on the breakout if we reclaim the hourly 200s in that supply zone again. But what happens if it just kind of like does that? It just goes straight up. It doesn't give us any sort of like breakout entry opportunity. Okay, so this is now really let's reassess this, right? This is now plan A. We're looking for that pullback into our bid entry still. This breakout above the local trend back into a full-fledged uptrend on every time frame is plan B. Plan C has not changed. Plan C is still, hey, if you break out above this resistance level, your next resistance is the moon. You probably want to be an Atom if that happens. So now you draw a breakout trade from here as well, which is somewhere over here off the side. There you go. Let's see. Oh, did I delete it? I deleted it. Well, it's in Friday's stream, but it would kind of just look like this, right? And you would look to justify the stop loss however you can. You're not just putting it all willy-nilly. You're saying, okay, well, maybe below hourly 200s, 30-minute 200s, whatever, right? Of course, below this demand zone as well. And your target's the moon. That's plan C. So you have, this is plan A now. That's plan B, plan C. You're still trading the trend. It's just on a different sort of time frame, right? But the idea has not changed. Would you still get into Atom? I think I just answered that, right? Cool. Let's do Link, BTC, and SYS. It wasn't my entry. Yeah. I did get in on one. So there's that. One USDT from Friday. Also the same exact setup as Atom. We drew it up in stream. I show you guys the trades that I take, the way that I approach looking at stuff. I don't think it was 25. I think it was a little bit lower than that. Oh, it was 25. Yeah, we took this setup for one. This was drawn out in stream. It's very much the same context as Atom. This is the ideal region. Either this holds or one USDT is fucked, right? And if we get above a local trend again, great. That means that this was probably the bottom in hindsight. And if we break out above this region, what's stopping us from more price discovery? And my answer would be not much. So very, very much the same context as Atom. Similarly, local trend, hourly 200s. So one hasn't really bounced as aggressively into its backtest of trend as Atom did, but I would argue this is a much cleaner chart. So I'm pretty comfortable with uh, the approach that we're taking on this. And my entry is pretty much the bottom of this wick, so hard not to be comfortable. Okay, sorry. Past 1 min. You get back to your stuff. Link BTC. Clean, consistent uptrend. My God. Parabolic. 200 daily moving average is very, very notable for Link BTC. Definitely want to be paying attention to those. So the fact that you are breaking out above them, the fact that their momentum is squeezing, pinching together sideways, maybe even slightly bullish, definitely signifies something potentially massive, right? Maybe it's just a move like this. Who knows? Maybe it's just a fluke like this, but we would assume not, right? We're going to assume the best and hope that it's not the worst. And the worst would be we come back down and we just melt. That's the worst, right? And we would assume the best, and the best is this. So when you're right, this is your reward. When you're wrong, you take it on the chin, you lose once, suck it up, cry about it for 5 minutes, get over it, and then keep on going and look for the next uptrending asset, right? So that's risk reward for you. Probability wise, every time we're above these 200 daily moving averages, more or less, when we start to trend above them, significant things happen. So you probably want to be paying attention to Link when we're above these 200 daily moving averages. Currently testing what I would call a daily supply zone. I'm still going to call this a bearish retest into this daily supply because technically speaking, a back test of it is something that you can physically see on the daily chart into a daily zone, right? So that means I want to be able to see daily candle, daily candle, daily candle, daily candle into this zone, reaction off of it, daily candle, daily candle, daily candle, daily candle. Something that looks like this. That's what you want to see, right? So it doesn't always happen. It's not always butterflies and dandelions, textbook like that. Everything's not always picture perfect, but when it does happen, that's what you want to see, to be comfortable enough to say, hey, this is a breakout retest of this daily supply zone. But from here, really, you are still just looking for the next level, the next level, the next level. Because truthfully, there's nothing telling you that you're not going to do that. The only thing that I would have argued that would say you're not going to see resistance into resistance into resistance into resistance uptrend, right? Would be those 200 daily moving averages. And we would establish that we're well above those. So we're potentially threatening a new, like, crazy uptrend from here. Locally, we need to find what's relevant. So not so locally, 4-hour 200s are very relevant. So definitely a key signature if we don't hold those on any sort of meaningful pullbacks. We would think that that's the ideal region to hold and continue that uptrend on the higher time frames. So if we didn't do that, that's signifying that, oh, this is just like an exit scam pump, or whales were forcing liquidity into your buys and blah blah blah, whatever narrative that you want to throw in there. And it would just be at the end of the day, that narrative should just say, oh, this was a fluke. We're probably fucked. And you would say that, I would assume, when you start to break down below those 4-hour 200s again, right? So you'd probably say that here, good thing. You might argue that, oh, maybe this time's different. You argue that, oh, we're probably fucked again, good thing, right? So same sort of gist, right? Break out above these 4-hour 200s. Oh shit, this is starting to look pretty different. That's a nice reward for just simply assuming this time might be different. So if you break down below them again, I can only assume the worst. I can only assume that we're not going to see some sort of crazy trend just from breaking out above the 200 dailies. It is a fluke. Whales, manipulated us and used us as exit liquidity, or whatever narrative you want to use. So then we have to ask ourselves, unfortunately, this digs deeper. You're going down the rabbit hole here when you trade something that's parabolic, right? Something that looks like this. Now we have to ask ourselves, can we anticipate a move into these 4-hour 200s? Or in other words, is this relevant right now? Are the 4-hour 200s relevant right now? Absolutely not. Like, not at all. Look at this 4-hour chart, right? High, low, higher high, higher low, high, higher low, higher high, higher low, higher high. Where did we do that at? Was it the 4-hour 200s? No, they're all the way down here. What is our 4-hour finding a trend along? A consistent uptrend, higher highs, higher lows, nonstop. One resistance into the next, break that, head to the next resistance over and over and over again. I'm going to say 15-minute 200s. For the most part, these 15-minute 200s seem to be what I would call the local trend. If we lose those, that probably tells you that, oh, good thing you labeled this as still a bearish retest into this daily supply zone. Okay? And as long as we're still above those, there's always going to be the chance that maybe this is the quick back test. It's not textbook, it's not ideal, it's definitely not what you want to see, but maybe it is. We just slightly pull back into this. You can't even see it on the daily chart. It's all hidden in one daily candle, and we rocket up into the next resistance. Right? So that's my validation to the current trend. That's also my invalidation. First sign of weakness that says, oh, now you can start looking for something more relevant on a higher time frame, something like those 4-hour 200s. So let's go to SYS BTC. That's pretty much it for Link. All right. SYS BTC, we have some price ranges drawn here, and all it's saying, if we are the analyst, right, rather than a trader, all that that's saying, don't give me too much clout because it's very easy to just simply say up or down. If you don't believe me, flip a coin, guess if it lands on heads or tails, and that's basically the same thing, right? So all we're doing is we're saying, hey, if we break out above this region, we're probably going to continue going up into the next key region. Where's the next key region? 162% higher into this daily supply zone. If we break out above there, we probably continue going up into the next key region, probably 175% move into the next daily supply zone, right? That's it. That's the analysis. There's nothing else to really say about this. We consolidated on a very high time frame, like the weekly chart, lower highs, higher lows. You're looking for the key indication of when is this time different? When can we assume that we're going to break out above the consolidation and continue higher? When can we flip that coin and guess heads or tails and draw out a price range and try to claim clout on it and tweet about it and see if it gets some likes and retweets? That's now can I actually trade this? I would think if you were trading this, you probably are paying attention to these 200 daily moving averages. They're not the most beautiful thing on the planet, right? There's obviously cleaner charts out there. It's not very hard to be cleaner than this, but for the most part, you do respect them. 200 daily moving averages. So I would think that you either positioned yourself along something like this, or maybe even the daily demand zone down here, and assumed, hey, if we're going to find a higher low in the weekly, as we assumed we are going to find, then the ideal spot to do that at would be this 200 daily moving averages, or maybe this daily demand zone. You either positioned yourself in that consolidation, or you're now looking to trade the trend. When you do something as significant as breakout above this daily supply zone in the middle of an uptrend on still high time frames but lower time frames, right? Lower than the weekly, but still high time frames, your daily. Daily is saying higher highs, higher lows, higher high, higher low, higher high, higher low, higher high, higher low, right? So when that happens, that is your textbook pullback retest into a key level in the middle of an uptrend outside of what you can only assume will be, or soon to be, a breakout of a high time frame consolidation. What should be the result of that? More up. More up into where? The next resistance level. Where's the next resistance level? 162% higher. So this, when we break it down like that, and this is not hindsight analysis. You've been asking for SYS. Someone's been asking for SYS BTC before, months ago. And that price range has been there, right? It's a probable 162%. If we break out above this region, this is a probable 175%, as long as the trend doesn't break. The trend is currently whatever we're finding higher highs and higher lows along on the daily time frame. And if we lose that, we will simply just assume that means a much deeper pullback into something that's more significant on an even higher time frame, the 200 dailies. So that would be an assumed negative 50% pullback, right? We're still trading the trend. It's just what time frame are we trading the trend on? So now we zoom in even further. But what are we finding higher lows along for this trend? Is it the 4-hour 200s? Not really. You could maybe do something a bit weird like the 3-hour 200s. You could try the 2-hour. I like the 2-hour. Right? That's what we're going to roll with. We've consistently trended along the 2-hour 200s, or if you want to think about it, 4-hour 100s, however you want to see it. And they have acted as the higher low on our daily chart every single time into a higher high into the next resistance level. So they are the validation for me positioning myself here. Any profit that I'm taking on the way up, if I'm taking profit, re-adding here. Again, re-adding here. Again, re-adding here. And if and when they break, they are my oh shit moment. They are, oh shit, this time is different. Acknowledge that it's different. You're probably going to see a deeper pullback. You would assume negative 50%, but who knows? Maybe it means zero. Maybe it means full blown, you just never stop bleeding. It starts to look like my nightmare. And who knows? Maybe it's just a little dip and reclaim, and everything's back bullish again. And now all of a sudden, here, the same arguments that we were making on the way up are relevant all over again. This was the bottom. Get back in, ride the wave. Right? But we would assume the worst, pray for the best. All right, got some more requests. Adam USD. We already did that, right? Did we do Adam? I think we did Adam. Yeah, we did. All right. Raji says, so now what's your plan, Merc? Just focusing on accumulating BTC. My plan is to have as much money as possible for when Bitcoin either has like a crazy black swan capitulation, and to have as much Bitcoin as possible for when we finally show key signs of strength. So I mean, honestly, it in my head, cash is king at the moment. I am just like my buying power is going up significantly. All I have done is just buy support levels at what I can only assume will be support. And if it bounces, I'm gaining value. And if we keep plummeting, then my purchasing power is going up at rates that I've never seen before. So like to be honest with everyone here, I have been in crypto for 4 years now, since November of 2017, right? And that means I was here buying Bitcoin on the way down at 3K. Right here, right now, at 40K Bitcoin, I have more purchasing power than I have ever had in my entire life. That is comforting. There isn't, you don't get much better than that. When you anticipate downtrend, when you get out 15% below the top just to avoid pain and suffering, and buy support levels on the way down and sell the bounces, and then have a dollar cost average investing plan in the meantime where even Jacob pays me most of my salary from SP in Bitcoin, right? So it's like when you have all of that, when something like a negative 20% daily candle happens, I'm sitting there enjoying my day, spending time with family, making breakfast, sipping on a glass of champagne, whatever. The rest of the market's panicking. It's just so comforting. And now we're at the point where the 4-hour 200s are at 47K, and my exit was 60K. So even if I miss the exact Pico bottom, right? Even if I'm just saying, oh, let me assume downside level into downside level, and I'm gonna be a buyer on the way down and ask questions later just because I like Bitcoin. Even if we break down from 40K and my next level that I want to buy is 30K, which it is, right? If we come down to 36 and we wick down and then we reclaim the 4-hour 200s from there, I don't care, because my exit is already so high. It's just a win-win situation no matter what for me now. When you put yourself in a position to take advantage of whatever happens next, no matter the outcome, now all of a sudden you've reached peace with the market. You can now go to sleep, whether you're in a position or not, and feel comfortable. Whereas 99% of people can't say that. They're either not in a position and they sleep peacefully, or if they're in a position, they don't sleep peacefully. Not many people have both. My advice, look for both. Look for a way to do both. Once you do that, you have a chance at making it. I'm being honest right now. I don't like, I might sound arrogant, but that's the biggest advice I could ever give anybody in crypto, in investing, in trading. Don't ever put yourself in a position where you need one outcome to happen. Am I accumulating BTC? I'm dollar cost averaging in the form of, I might buy some just randomly every week or two or whatever. Jacob pays me most of my salary in Bitcoin. I'm buying support levels on the way down. But because I have acknowledged the trend shift in the macro environment, just by simply saying, oh, below 4-hour 200s, we've only done that 3 times this year. This is the third time. Let me get out of Bitcoin. That's all I did. And all of a sudden, I've now put myself in a position to take advantage of whatever happens next. I don't care if we see a 50% green candle tomorrow. I don't care if we see a black swan event and capitulate negative 30% today. It doesn't matter. I'm still in a position where I can succeed. That is the takeaway from all of this. More than, oh, hey, there's a gray box here. Oh, hey, pay attention to these moving averages for this asset. More than any of that. That is the takeaway. So that's what I'm doing. Wise wants OMG BTC. Hold one longer this time, Merc. Rose USDC, please. All right. So we got OMG BTC and Rose USDC, and then that'll probably be it from me today. Let's go OMG BTC. All right. So 200 daily moving averages, we could maybe argue get respected on a high time frame. Are they relevant locally? I'm going to say absolutely not. This price action doesn't do anything for me. This price action doesn't really do anything for me. This is a clean retest. You could maybe argue this is a clean retest. You could maybe argue this is a clean retest. I think when you look at this as a whole, it's kind of just like looks like nonsense, right? It just kind of looks like jumbled, not really relevant. So here's what I'm going to do: just turn them off. So now let's just trade the levels, right? It's a very simple assumption. As long as you're below this region, these are the two levels that you're working with. If you're above that region, you can assume absurdly high prices. You can assume, hey, this gray box that I didn't have drawn, but I'm going to draw here right now, right? Maybe that's our upside potential. And if we break out above that, what's the next one? We can maybe draw another gray box all the way up at, what is this, 12K sats, 12.5K sats, right? So we're just trading level to level. And then for the downside, you break down below this region. These are now the levels you're working with. You break down below this region. These are now the levels you're working with. You break down below this region. These are now the levels you're working with. At this point, this is where you reach maximum buy opportunity for OMG investors. And the reasoning is if you go any lower, right, if you go any lower than this region, that means doom, right? That means new all-time lows. Turn your brain off. Stop buying OMG. This looks awful. Bulls are dumb. Lower highs, lower lows, price discovery, but towards the wrong side. Get the fuck out and stop making bullish arguments, right? So you either hold that region, that's the optimal, oh, I'm an investor, I'm just going to buy support because it's support and ask questions later. And nonetheless, it's support. This is the region you're working with. Your bounce potential is 60%. It's not a probable 60%. It's just simply saying, oh, support is support, right? Kind of like you would have said here. And if you do manage to show strength, then that's when things start to become interesting again. And in the meantime, you just kind of assume that breaking down below here means here. You're still barely holding on to this region, maybe, but let's assess lower time frames to really come to a conclusion, right? So let's turn our moving averages back on, our beloved moving averages. So now, are the 4-hour 200 moving averages relevant for OMG BTC? And I'm going to say yes, they are. They seem to be pretty relevant historically, and I would even argue locally. Right? Pretty clean back test as resistance, and they acted as support here. Nice little spike upwards. You should have continued to hold them. The fact that you didn't means doom. You can only assume it means doom, right? You would assume the exact same thing here. Only a little bit of a pullback. You finally reclaim. Great. This now means glory, right, into your next resistance, which actually we did have marked. So there's a gray box inside the gray box. That's nice. You would assume that means glory, so losing them again probably means doom, just like you would assume back here. So have you reclaimed your 4-hour 200 since then? Absolutely not. You're now seeing them get used as resistance all over again. So has the bearish argument that you should have been making both here and here, somewhere in between this candle, has that argument changed at all here today? No. Does it start to look different if we do this? Yeah, it does. So if we do that, then all of a sudden this demand zone has held. We know that that demand zone simply implies our bounce potential is potentially 40% into the next resistance again. So that's when this starts to look different, right? That's when OMG BTC starts to catch your eye. And you should say, oh, let me look for a nice little reversal play. And I'm actually playing probabilities in the form of multiple trends on multiple relevant time frames. So if we take something like a more local, let's get rid of this. Hold on, wait. Let's do this. Let's get rid of that big fat gray box and let's instead pinpoint it a little bit more to a little tiny range. I say tiny, but it's like 10%, 15%, 10%. Yep. So obviously chop. Don't pay attention to these hourly 200s. We're going sideways. You buy here, you sell here. You buy here, you sell here. You repeat that process all over again. So if you reclaim your 4-hour 200s, you're also breaking out above your range, right? So that's a sign of strength amongst multiple time frames. In the meantime, you're still holding this daily demand zone in this general region. And to pinpoint that a little bit more, you have these range lows on your hourly. So if you break down from this hourly range, that probably tells you that your daily demand zone that you were desperately holding on to for the past week or so, or no, wait, December 5th, for the past month, are no longer holding, and you can look for that move into your all-time high demand zone, 30% lower, right? And that's just trading whatever the current trend is, which there isn't one. We're in a range, and trading whatever the outcome of this current range is. And that agrees both with continuation of the high time frame trend if you break down and a reversal if you manage to break up. Right? Because your 4-hour 200s are right there. So pretty clean chart, honestly, OMG BTC. This is like if you're a trader on training wheels, if I had to give you a certain asset to trade, I would give you this. It's nice. It has confluence both in trend and in range. The context to understand is very simple. It's a really clean chart. Last one would be Rose USD. Usually do DT. Yeah. All right, so Rose USDT. This was the price discovery, higher highs, higher lows, turn your brain off. You know, bears are dumb sort of example that we used. And I'm not going to go too deep into it, but basically just understand that the probability of further price discovery is so high, and the risk reward for that probability or for that outcome is so absurdly high that it makes it very unappealing to be a paper hander or even a bear on something that looks like this. So that was the argument when we were full blown trending on every single time frame, right? And it's kind of the argument now here today. It's more so that uh, the local trend has most definitely broken down, and the high time frame trend is all we have left. So either this snowball of weakness bleeds into the daily as well, and that would be something like losing this daily demand zone, probably sees a move down into 21 cents ish. That's a negative 30% drop. And who knows, maybe that region doesn't hold either and we keep bleeding, right? But 29% pullback, 30% pullback would be what we would assume is like the minimum result of the lower time frame weakness bleeding into the higher time frame. Because now we're saying, okay, where do we find a higher low on Rose USDT somewhere higher than this low on the daily chart? My answer would be here, right? So if not here, where do we find a higher low? Well, we probably don't, because the next support level is all the way below that market structure. So who knows? Maybe we continue just snowballing downwards. Someone unmuting their mic. You got something you want to say? By all means, go for it.
Sorry about that. I'm good.
Oh, you're good. I encourage you guys, if you want to unmute your mic and come talk to me, and even if it's a middle analysis, you have a question, anything, by all means, go for it. So we also had confluence to that idea, right? Where we're saying, hey, the ideal region to find a higher low somewhere higher than here would be this daily demand zone. I would think if you're making that analysis, you're including the 4-hour 200s along with that. So the 4-hour 200s pretty solid for Rose, right? Pretty damn solid for Rose. Macro bottoms, macro tops. Starts to get a little bit choppy somewhere through here, but for the most part, still widely respected, right? So I would assume if you're going to make that argument, you're including the 4-hour 200s with that. You lose the 4-hour 200s, you lose your daily demand zone, you probably don't want to be in Rose anymore, and all of a sudden, what we labeled as a very probable idea, a high time frame expectation into price discovery, calling bears dumb, all that stuff, that goes away. And now we have to apologize to those bears because they're right this time, even though from a risk reward perspective, it still wasn't the most favorable approach. We kind of got to apologize to them because they were right. So now we're at a point. We have come down and tested the ideal region where I hate to say this. Dude, I get memed for this, right? There are literal memes that say this, but it's a make or break, do or die sort of zone, right? I hate doing that, but that's what it is. That's what it feels like, at least. You either hold on to this high time frame region or the lower time frame weakness bleeds and all of a sudden Rose USDT is unappealing to own at all. In the meantime, obviously, if you're riding the wave upwards, if you're full-fledged, balls to the wall, higher highs, higher lows, bears are dumb, price discovery, you can't tell me why this is going to be a top, 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 right? If you're that person, you're probably looking for some sort of signature on the way down into your ideal region where it's do or die, right? To tell you, hey, if you didn't take profit on the way up, take some profit now that we're breaking down, now that we're showing signs of weakness. So you could have argued the hourly 200s. I think more relevant might have been 30-minute 200s. Yep. Local trend, local trend, local trend. This might have caught me off guard. Yeah, I probably would have had my stop below this wick, so that probably catches me off guard. Reclaiming would make me think, oh, this is a fluke. Let me get back in. Let me keep riding the wave. Bears are still dumb. And breaking down, would make me think, oh, we're fucked. Just like this would have made me think, oh, we're fucked. Right. And this time around, we actually were fucked. We actually did get the much deeper pullback that very much warranted taking profit on the way down now that we're showing signs of weakness that we haven't shown since December 20th, when we initially started this move upwards into a new all-time high, right? So now we're looking for this same trend to break bullishly. You're showing a little tiny key, you're poking your head out. You also have those hourly 200s. So now we can say once we get above this region, in hindsight, this was probably the higher low on the daily. We know that the trend is higher highs and higher lows. So if we can say this was probably the higher low, what are we expecting further? A higher high, right? And if we get a higher high, what are we expecting as a result of that into the next resistance? Where's the next resistance? There isn't one, right? We're looking for the 2.618. We're looking for the 3.618. We're looking for the 4.236. Maybe Rose goes to $100. We don't know. We just know that we want to turn our brains off and ride the wave. Higher highs, higher lows, into price discovery, trend upwards along 4-hour 200s, and then locally hourly 200s, 30-minute 200s, whatever it may be, right? So for now, if you have that buy zone at this ideal entry where everything kind of falls into place, it's a do or die, make or break sort of region, you're not sitting too comfortably. You're still entertaining the idea that maybe this is still a top, just like this was a top, just like this was a top, just like this was a bottom, this was a bottom, that was a bottom, right? To the overall downtrend where we leak into the higher time frames. Once we break out above that region as well, oh, this is a fluke. This is the bottom. We tested the higher time frame trend. Everything's bullish again. There's nothing stopping us from creating a higher high. And if we create a higher high, I'm looking for more price discovery. So this is not the area where I would be entertaining Rose USDT, but slightly above, sure. And of course, well below, like earlier today or yesterday, absolutely. Okay? So hopefully that helps. All right, guys. That's gonna be it for me. Hope you enjoyed today's live stream and all the analysis that we went through. Um, I hope you guys laughed too. And yeah, that's it. So thank you as always for coming and spending your time with me. I really very much appreciate it. Love you guys so much. And yeah, I'll see you on Wednesday. So take care, everybody. I'll see you soon.